Welcome to Markets Now. I'm Michelle Rourke with Scott Varilek with Kooima Kooima Varilek. Well, we are seeing mostly higher prices except for the wheat market this morning. And Scott, let's talk about cattle. It's been a kind of a choppy week here. We continue to be kind of in this tug of war between good cash news versus the bird flu news, right?
Yeah. Good morning, and thanks for having me. But the back and forth tug of war, you put it right out there, and we'll celebrate the record cash prices. We get record high live cattle prices. We get record high feeder calf prices. I've got a feeder calf index that's hitting those record prices right now. So it seems like we'll have a good week. We'll celebrate the cash, and then the next week's been the bird flu twist. What's the next evolution of that story? So it's the back and forth chop. It's not necessarily the intraday chop. It's more of a week at a time. So this is the week we get to celebrate cash. We had good news last week, started the week this week, and feels like we're just waiting for that next, slap aside of the head. How are you going to twist this bird flu story yet again into something else?
Yeah. How much tighter do you think the numbers get going forward? I mean, can that continue to pull the cash up here, or will it? Or will we continue to be, one step forward, two steps back?
The tightness of the numbers, I mean, that's what's got us here now. And we're just turning the page into this, next year's calf crop for the North. So there's that seasonal shift there as, okay, these calves are starting to sell at these prices and these prices. So we're still, looking at less numbers year over year. And as I look at kind of the scenario on the board, we're saying, okay, so we've got some 190 to 193 cash trade on last Friday, and those cattle are already shipping next Tuesday, next Wednesday. They're moving fast, and I think, that's something that's not normal to me. I'm hearing, well, that's how that packer's been doing it, and I disagree. It's just a couple of years ago, we were trying to get 30-14 passed, 30% of the trade to be cash negotiated and picked up within 14 days. I mean, we were trying to mandate that they have to pick up these cattle because it's not, something that's normal. It's been hard to get cattle in, and we're enjoying that right now as you can sell cattle and they get picked up immediately. So I think that's just showing the tightness, and that's why we're able to ask some of these higher prices. The South has been dragging along steady, and then late Friday, cash cattle Fridays, we're getting some big boosts on some of these prices, and that's just how tight these numbers are. And I think moving forward, you start to say, okay, this calf crop, do I keep feeding this critter here? Do I try to, take some of this 192, 193 because I've got a board? June's at 184 and running out of time. Well, what's August? 179.50. There's quite a discount for me. Yes, I can lower my break even by putting extra weight on, but this might be as close as I can get to scratch. And even if I sell them a little bit early, I've done that myself. Penciling the numbers, I think there's got to be some thinking about, I can take this price now, even though my cost of gain's good and says put some more weight on, but my futures market's not telling me that there's better days coming.
Yeah. And when you talk about record high feeder prices, boy, it's really tough for these guys to be making a profit here. Break even's pretty tight, isn't it?
Yes. Record highs, feels good, but a lot. I mean, we needed some more profitability in the cow calf sector. And that's where it's getting hit. We needed that incentive to say, hey, the cow herd needs to be rebuilt. We've seen it get, diminished, and that's because there wasn't enough dollars making it down. So they've got the leverage right now, the feeder calf side, trying to say, hey, we are willing to pay this, and you have a lot of empty pens around. Everybody's jumping over themselves, trying to make sure they get some pens filled, get some inventory, and on less numbers, the auctions are hot. So these cattle that are going out right now, after last fall's prices that were great prices, there's not been a time or that you could have locked in a profit on those cattle. I mean, it's been pretty sideways. You don't have a position on the board that says, hey, I locked it in, much higher and I'm ready to go. You never really got that opportunity. So there's some cattle making some money here. It all depends on your costs of gain, how much weight you could get on them. If they were light enough coming into the fall, I think you've got an excellent turn on this group of cattle here. But there's a lot of them that have 185 to 190 break evens. So it's not like there's a bunch of meat on the bone to be had.
We have these weights. They've been a sticky problem but we have some hot weather coming in. So do you think that's going to start curbing some of this performance, maybe pull those weights down a bit?
I think that's, we're starting to see that middle of the week here, that we're seeing our first heat. And yeah, I think that could affect the weights a little bit here. You've got the futures market that tells us lower, and then we've got some heat coming on. So those two working in tandem, I think, can start to pull some of these carcasses down, as maybe there's incentive to pull the cattle ahead. And I feel a lot better that mine have shipped yesterday, and it's, going to hit 90s today. I think there's a good feeling about that. So yes, you're right.
Yeah. All right. So we have both cattle and hogs up this morning, and we had CPI data out as well. And so it looks like that's rallying the stock market. It was maybe not as hot as they thought, only 3.3%. So is that the push that we need here as well from the demand perspective to keep the meats moving forward? I don't know if there's much help for hogs, but
right. Well, I think it helps. I mean, the outside markets have been a little on the wild side. I mean, as we've seen energies to metals to the Dow Jones, S&Ps, dollars moving all over. There's been a lot of outside market factors into our markets just on the weak side. So anytime we see a little boost, hey, the market likes what those numbers said. I'm okay with it. I didn't see anything in there that I was in love with, but stock market's rallying. That's going to help us out. So a healthier economy is always going to be better for sure.
Yeah. So hogs, like I said, the front end of the board is trying to rally. It's been hard to maintain these rallies. It feels like the funds sell on every uptick here. Pretty hard to get the futures to go anywhere when the lean hog index is down, now for the fourth day again?
Yeah, it's been a nice, the trend is your friend, and those hogs, when they find their move and just stay on it, they can stay on it for an extended period of time. But we've got a lot of stories we can look at to unpack if we think these hogs can hold or not. I mean, one of the reasons we're maybe lower, we've got the Mexican peso has gotten significantly weaker in the last couple of weeks due to some of their political changes. So they're one of our good customers, so that's kind of one of a negative thing. Okay, well, what's going on with China then? We've got 20 to 30% higher prices in China for pork, so that's a good thing. So maybe we're kind of dancing between those stories there a little bit, and then we've got our weights right here. We dropped week over week. Maybe that's going to be the continued trend because of the warmer weather. Would think that we topped, a year ago last year. So we were 9 pounds over year ago levels. That's a little bit of the scary part, but it was last week, a year ago, when we started to break those carcass weights, and I think that can happen there. So maybe between some of those stories, I'd say China, get these weights decreased. Maybe we can start to bottom on some of the worst news maybe is behind us.
Yeah, let's hope so. Grain market, row crops back, trying to maintain a little bit of upward bias this morning in light of the wheat market being lower. And I felt like corn has really held up well with this big correction that we've had in the wheat market.
I would agree. Corn's holding better than I expected with this large wheat correction, because I felt like part of the rally on the corn that we had earlier was because of the wheat. Right. We did pull that all out, ahead of time. I guess once the wheat started to roll over, corn quickly took it all out. But here we sit. All these moving averages in corn are just tight from the 100-day down to the 10-day. It's just like all these twisted up wires just all together. So it feels like, that basically is saying that we've got a sideways market. I'm pretty content at 450 either side. The things to note is we've got the July corn gaining on the D's corn slightly. So you got a little bit of bull spread action. Some of this demand could be getting a little better as the basis gets a little better. But I think old crop and new crop can continue to narrow slightly. And report today, I don't know if that's gonna give us any big bright ideas on whether this corn has to break up or down. But I'm more nervous about the soybean side on what that says. I mean, moving forward as we start to raise that ending stock number for beans, I think there's a lot of risk there to the downside if we do start to raise that number.
Yeah, and exports have been behind. We've had some flash sales even this morning from China, but we got a little ways to go to catch up here. That's a bit of a concern too, isn't it?
Yeah, very much a concern. I think demand has been the concern for these grain markets in the United States for sure the last year. It's ongoing, but you've got the ever increasing South American crop. Every year they have their foot on the gas pedal and they're going to raise more bushels every single year. And China is invested in buying beans from them. So we know that that's happening. And if we start to raise our ending stock number, and if we start to have some good weather on these soybeans, and this demand is not keeping up, we could be, in a short-term trouble here for a while. I know we've got some more manufacturing that's planned on coming online in the United States in the next few years, but that's years away yet. So short-term, I think there's, lots of risk if we don't get that demand boosted there.
Yeah. And like we said, we can talk all we want, but it's really all about what happens with the weather. So, thanks so much, Scott Varilek with Kooima Kooima Varilek. That is Markets Now.